ahead and dive in with the Trump tax cuts. Trump's biggest thing that he did while he was president was the tax cuts, mostly for the rich. But there are
the tax cuts.
Right. It added trillions and trillions of dollars to the deficit and the debt. But it was a big tax giveaway for the wealthy. But a lot of these exceptions that were put in there are going to expire, which means a lot of our taxes are going to go up next year unless something's done about it. We covered kind of Kamala Harris's plan, because if you don't let them expire, you're not going to raise enough tax revenue for the government because it's down right now. So you have to find some way to raise more revenue, but you don't want to bleed out the middle class now that we're recovering from COVID. So Kamala's got a plan. Trump and his team don't really have a plan. Now here's Jason Smith, who's the Ways and Means chair for Trump, and he's on Squawk Box, and David Pakman covered this, and they're asking about what are you going to do about this, because you got to find a way to raise more revenue, but how are you going to solve this plan where taxes are going to go up on everybody if you don't do this? And how are you going to make a difference?
I can't wait to hear this, because I got to tell you, Trump's tax cuts, do you know what they did to me?
Nothing.
So everyone was like, yay, we're going to get more money in our paychecks. And this more money in our paychecks was $30 for me, okay? $30 more in my paycheck. And I was like, $30? I live in New York City. Yeah. $30 is like, at best, like one happy hour, you know?
And we got taxed.
But at the end of the year, I owed money in taxes, and it was 3 times the amount I had owed the previous year. Right. I owed a little the previous year. I'm now in a position where I typically owe a little, but I owed 3 times the amount, and it's basically been that way ever since. So Trump's tax cuts cost me a ton.
Well, yeah, they've screwed a lot of people, and we'll go into that in a second. But the question is how are you guys gonna extend these cuts? And if you do, how are you gonna thread the needle on making enough money that you don't drive up the debt again? Because Trump drove up the debt $8 trillion. He drove up the debt more than any 2 other presidents combined in 4 years. So we're going to go through this because it's just crazy. But this is the answer. Get ready to be woefully disappointed.
Detail. In taxes. But how would you pay for extending the tax cuts and getting rid of the SALT cap?
We're going to have to look at everything. I think whenever you're looking
That's a big number, though. Is it not? What would the number be?
So first of all, how will you pay for it? We will look at everything. Okay, that's not really an answer.
If you got rid of the SALT cap and you extended the tax cuts, it's trillions of dollars, isn't it, over 10 years?
It's about $900 billion over 10 years is the SALT cap elimination. You're looking at $4.6 trillion worth of unpaid for tax expirations that we have to address. So we have to look at everything. Everything is on the table.
You think tariffs can pay for that? Are you?
I think we're going to have to look at absolutely everything. There's not one thing that can pay for $4.6 trillion.
Like what, though? Do Republicans aren't willing to raise taxes anywhere?
Well, I think there's hundreds of billions of dollars out there that the administration has tried to use for student loans. I also believe if you codify various aspects of the 301 tariffs, that can raise a lot of money in the hundreds.
Okay, he believes that is bullshit. First off, the student loan thing, there's not trillions of dollars there. There just isn't. Okay? Because right now, we run at a deficit on student loans because of the cost to administer the loans. The government makes less back than what it put out, and that's already paid for on the balance sheet. So it doesn't affect the actual balance sheet in any real sense. Plus, the money the government does get from student loan payments, we then deduct those from our taxes. So they're not getting taxed on any of that money either. So it doesn't really offset the balance here. So there's not trillions of dollars there in student loans. And the forgiveness for student loans didn't actually hurt the government anything. It actually saved the government money over the 10-year period. In the 1 or 2 year period it costs, but over a 10-year period the government's saving a lot on administrative costs. So that's all bullshit. And extending the 301 tariffs, that's not going to do shit. Because we've explained last time, if a tariff works, nobody pays it. They just buy domestically.
Okay, not to mention, can we just throw out the simple fact that he didn't actually say anything?
Yeah.
Because the question has been posed to him several times. They've posed, okay, how? Okay, by doing what? Okay, by making the cut where? Right?
Right.
By increasing where? You know, like, he's not saying where they want to cut, where they want to increase it. Like, oh, well, the money's just, I mean, we're going to look at all the things and it's going to be somewhere.
Right.
Somewhere is where the money is.
Yeah. Over the rainbow.
Well, no, we want to know where you're going to raise and cut, because we want to know if that applies to our wallets.
Right. So that's all horseshit. I mean, they don't have a plan. He's just sort of spinning wheels here. I have another clip from this. Yeah, so here's the second part of this. I just wanted to go through it, because this is... they did this on Squawk Box, and Squawk Box is... they're okay. They lean pretty right-wing, but this is just... I mean, I'd be hammering this guy really hard about, what do you mean it's all on the table? I mean, that's a scary thing to say.
Because there is no way in a cap on salt. Because there is no way in a Republican House of Representatives that you can pass an unlimited salt deduction.
So what kind of number do you think that'll be?
A higher cap or a lower cap than where it is now?
I would say definitely a higher cap. There's going to have to be some wiggle room. If you look at the salt cap that was passed in 2017, it had a marriage penalty. Republicans are supposed to be the party of families.
All right, so listen, the bottom line here is they have no idea.
So let me get into that. He's right. They have no freaking clue what they're doing. So here's what happened. And let me explain what's happening down the pipeline. So here's the Brookings Institute. They just get a real brief. Which provisions of the Tax Cut and Jobs Act expire in 25? This is Trump's big signature bill, the only real thing he did as president. So as they go through the Tax Cut and Jobs Act, which are the most significant expiring provisions? We're just going to skip to this part. The standard deduction, okay? Now, the TCJ increased the standard deduction and eliminated personal exemptions. What does that mean? That means this. For example, if the TCJ expires under the current law, the standard deduction for a married couple will be approximately $16,525. So if you're married, that's your standard deduction. You don't have to pay tax on that first amount of your money, $16,525. Well, the personal exemption will be about $5,725. Okay? So that's if it expires. Okay? Individuals will get to deduct $5,275 off the top of their income. Married couples will get $16,000. If the provision of the TCJ were extended, if they extend this tax cut for the standard deduction through 2026, the standard deduction would be roughly $30,725 for married couples, and it would be zero for singles. That's what it is now. Right now, if you're single, you don't get that personal exemption or deduction. They took that away. It's only for married couples, and married couples get $30,000. So it really sort of targeted out and overtaxed people who are single. Which, let's be fair here, who does that mostly affect? That mostly affects millennials, Gen Z, and Gen Alpha, because fewer and fewer of us are getting married because of the cost of getting married. So you're overtaxing younger people.
Or getting married older than generations before us.
Right.
I have gone to really quite a few weddings in recent years of people who were in their late 30s,
40s,
and early to mid 40s, and it was first marriages.
Right.
Not even second marriages, getting married for the first time. So that does, that
Right.
age is sort of bumping up.
But that was the scam to that. What we're going to do is we're going to overtax younger people, and we're going to overtax people that live in urban areas. That was the whole strategy here, which comes to some of this stuff. Individual income tax rates, they cut it down from the top from 39.6 to 37. That'll increase again. So
Just pause a second. On on the standard deduction, though, I want to remind people, because it's probably been a really long time since you've had your taxes done under the old rules, ever since the Trump cuts, right?
Right.
You used to get personal exemptions that you're not getting. So while the standard deduction is lower, you also got a personal exemption which added to it under the old rules.
That's what that is, yeah.
So I just want to reiterate that it's rearranging how things are, but Republicans will try to make it look more alarming than it is because those personal exemptions, they're different than a standard deduction, but they kind of add into that total that you don't have to pay taxes on.
Right.
So there's more to it than that, and I want to point that out because that little piece of information can be used in a very misleading way if nobody brings up the personal exemption. So if you hear people talking about, but the standard deduction is going to change, you got to bring up the personal deduction because that makes a huge difference.
Right. There are no personal exemptions now to speak of. They cut almost all of them. So
correct.
On top of cutting
the code has that.
Yeah, on top of cutting the standard deduction for singles. So this is really devastating because let's say you're head of household and you're a single parent. You don't get the personal exemption and you don't get the standard deduction. You just get the one head of household deduction. So it ended up hurting single parents and people who are single, which is mostly younger people. We raised taxes on them to cut them on older people. That was the whole trick to it. That was the whole scam. Anyway, the individual income tax rates will go up again for all of us, not just the top, but all of us. This was the one they were talking about. This is the one Trump's been talking about, cutting the SALT deduction. Or not cutting it, but expanding the SALT deduction. So SALT is basically state and local taxes. So for all my state and local taxes that you pay, me, you, anybody else, we get to deduct some of that from the federal taxes, from our income on federal taxes. So the feds don't charge us tax on that money. What they did was they capped that to $10,000. Now, that doesn't really affect most people who live in rural areas or red states. But if you live in an urban area or a blue state, you pay a lot more in state and local taxes. Because you're paying transit taxes, you're paying for other utilities and things like that. So it's a much higher amount of tax you pay. But you don't get to deduct anything past $10,000. So that was just to hurt urban areas and tax us more money. It didn't really affect a lot of, suburban and rural areas, but it affected people that live near or in cities. So that's what that was. Trump's talking about expanding that because of that they brought in a lot of money, but at the same time it hurt a lot of people, and it doesn't help him out. I don't know that he's going to expand that, but they've talked about raising the cap, and that's what he was talking about. That child tax credit, the TCJA did increase the child tax credit for children under 17 from $1,000 to $2,000, and that's not adjusted for inflation. The maximum credit can be refunded increased from $1,000 to $1,400 per child in 2018. That is adjusted inflation and is a set of $1,700 in 2024. The TGA also increases income thresholds at which the credit phases out. So the child tax credit will fall back to $1,000. Now, on top of that fact, the expansion of the child tax credit that they did during COVID brought 20 million something children out of poverty. The fact that we have that many in the United States, but we pretty much eliminated child poverty by expanding that credit. The Republicans, with Joe Manchin's vote in the Senate, reversed all that. So that extended whatever it was, $3,000 a year that they were divvying out at like $5 or whatever it was, a few $100s a month, right? $600 a month, whatever it was. It wasn't even that much. It was a few $100s a month, but that was cut. Well, Kamala Harris has proposed, I want to bring back the child tax credit, but I want to make it $6,000 a year, which is $500 a month per kid. And that will basically eliminate child poverty. And it really doesn't cost it that much in the net scheme of things. So there was that. Small business deduction. The TCJA provided a 20% deduction for qualified pass-through income for sole proprietors. Partnerships and S corporates with the TCJA expires. This deduction will no longer be available. The pass-through doesn't apply to a lot of businesses. It does to some, but not very many. What Harris has proposed is let that expire, but what we'll do because we want to encourage startups, because this helps establish businesses more than it does starting new businesses. But she said we're going to help startups, so the first $50,000 of income your new company makes, if you start a new company or a small business, that first $50,000 of income is not taxable at all. So that'll help a lot of business, because most businesses fail within the first 2 to 7 years. And the part of the problem is that's having to pay for all the expenses, and taxes are a huge expense on a small business. You'd be surprised how much small business owners pay in tax. It's a lot of freaking money. It is a lot. So a $50,000 windfall would help a lot of people succeed where they'd otherwise fail. Because a lot of people, they think they did okay for the year, and then they turn around and they owe a $20,000 tax bill. Then it eats away at their business. So those are just some of the things. They changed the AMT and the estate tax. But what are you going to do? Because now all that revenue has been gone for the last several years. It's jacked up the debt, right? If that expires, taxes are going to go up on everybody, which is going to slow the economy, and it's going to be pretty dramatic. So we have to find some way to balance that out. Harris has proposed a plan to raise revenue, but it involves taxing the wealthy. People who already have a lot of money. And we're talking about people that make over $400,000 a year. That's who she's going to take it from. People that have hundreds of millions of dollars in the market. That's who she wants to take it from. So she wants to tax the wealthy, lessen the income inequality and wealth inequality in order to pay for all this and pay down the debt and the deficit and be able to provide all the services we need and end child hunger and all that. So that's her strategy. Their strategy is, well, we have to look at it. We don't know. So vote for what you want there. Because they can't say what they really want to do is, well, we're not going to tax the rich. We'll just run the deficit and the debt up. And we'll just bleed up poor people.
Like they can't do that.
Yeah, they're not going to say that. So that's it. That's the Trump tax strategy going forward. Just so you guys were aware of it.